We're talking a little bit about fundamentals versus technical analysis. Some people swear by fundamentals. Fundamentals is the only thing that matters. Some people talk about technical analysis, and technical analysis is really what they go by. And for both of them, they both work really well. If you're a fundamentalist, if you typically trade stocks based off the fundamentals, you're typically looking at the long term. You're typically looking at the overall health of the company, checking out earnings quarter over quarter, making sure that the company still has a solid moat, that their business model, of course, is still relevant in the times. From a technical analysis standpoint, you're looking at the past history. You're taking a look and you're taking note of fundamentally where stocks have formed consolidation, points of consolidation where the market has bounced, right? You can see that right here, right? So from a technical analysis, you would see these 16s, for example, looking at the JetBlue chart, and technically speaking, you'd say, okay, I can see that multiple times that the market has held that $16, and so I'm going to be a buyer at 16, and I'm just going to wait for the check out the volume, make sure I'm not getting increasing volume to the sell side, and we're going to wait for a bounce. And over this period, let's say checking out from, let's say, from September all the way till October, you could literally have just traded this channel, right? This is from a technical standpoint. You could have just traded this channel right here and say, I'm going to be a buyer here, I'm going to be a seller here, and fundamentally the stock is still going in the same direction over the long period of time. The stock or the company, you may think that it's a solid, JetBlue is a solid company, they're going to do well for the coming year. From the technical analysis standpoint, you're just trading the channels. You're just buying at periods where you're noting positions of strength, and then you're selling at what look like positions of weakness, right? This is what you're seeing right here. 1, 2, 3, right? Positions of weakness where the stock was trying to break out, was trying to break 16s, or I should say was trying to break above 20, and it was having a hard time. And so typically when I look at a company, I'll look at the fundamentals. For the portfolio, my M1 portfolio that I'm working on, I utilize both. I utilize the fundamentals. I pay attention to earnings, price earnings, acquisitions that companies will do, standards of practice that I think will be either beneficial or detrimental to the company. But then when I look at the stock, I say, okay, well, where can I get in? Where would I look and find points of interest, points of strength, and where will I note points of weakness? Right, you can see that right here in the JetBlue chart. Had a hard time breaking above that $10. Right, you see that right there, and you see it again right here. You see it again right here, and finally a break up. Right, we see finally a breakout to the upside. And then what do we see right here, right? You see right here, you see a retest, right? We see the retest of about 10, between like 950 and $10. We see multiple 1, 2, 3, 4 days where the market tried to test what previously was its resistance, and then it bounced off of it, shot right back up. And what did it shoot and fall back down to? Right, so this is what technical analysis tells you. Technical analysis, when you look at a chart and you say, well, why did it back off? Why did it abruptly back off? And then you look back over at the chart, right? What we were just talking about, right? Weren't we just looking at points of resistance, right? $16 over the course of, from say October of 2008 all the way up until October of 2019. Literally a year of price action, literally a year of traders basically telling you where they were buyers, and traders and long-term investors or swing traders showing you where they were sellers. And so this is what you use to your advantage. Right? You can see that right here, right? We see it right here. Why did it sell off at 16? Why didn't, JetBlue just keep on going up? Why didn't it hit 18? Why this arbitrary number, right? You have to look back at the chart to see from a technical analysis standpoint why the stock backed off and why it backed off so abruptly, especially after having such a huge volume spike right here. You can see that volume spike right here. And then another volume spike right here. And then immediately a sell-off on weaker volume, followed by a sell-off on stronger volume. You see all the sellers coming in. So they basically ramped the stock all the way up. But if you were paying attention to the chart and you realize, looking back at the chart, JetBlue seemed to struggle. JetBlue seemed to bounce multiple times off of 16. And I know from a technical analysis standpoint that floor now becomes my ceiling. That floor now becomes my ceiling. And so when you're a long-term investor, if you're just looking to buy stock for the long haul, and you're thinking, I'm going to hold this because I like this company, at least I'm going to hold it for the year. As long, barring that nothing goes wrong with the company and they don't make any foolish decisions, and there's nothing that's going to be detrimental to the industry, you might think, well, where am I going to buy? And so when you utilize for your long-term portfolio, those are questions, especially if you're a dividend investor. Especially if you're a dividend investor, you don't want to be buying at the highs. You want to be buying as close to the lows, so that if for some reason something does happen, at the very least you've gotten the cheapest stock possible. And so that's why it's important. It's kind of like if you're dating and you meet, pretty young woman, and she's 20 years old, and you meet her, you talk to her, and from physically, she might be everything that you like, right? Fundamentally, so to speak, she might have all the qualities that you like in terms of looks, right? Or she's your type, as they say. But then as soon as she starts talking and she starts telling you, I want a big house, and I want $100,000 wedding, and I want a $50,000 diamond ring, etc. You might be thinking, whoa, technically, fundamentally, you kind of meet my standard, but you are too high priced, right? You're overvalued. Your value is too high. What you're looking for, right? The price tag is just too much. And so that's what's important to consider when looking at a portfolio, when you're looking for swing trades, and of course on a smaller scale, when you're day trading, you might be looking at a 5-minute chart, you might be looking at a 1-minute chart, and it's important to trade the chart according to what you utilize. So if you utilize a 1-minute candle, right? If you utilize a 1-minute candle to get into a chart, well, then you've got to use the 1-minute candle to get out. If you use the 5-minute, then you should be sticking to the 5-minute candle for your entries. If you're trading or swinging based on a day chart, if you're looking at the chart and you're like, I see a breakout above 10, you don't go ahead and then start using the 1-minute and the 5-minute for intraday. That defeats the purpose, because you got in based off of what the candle did for that day. In essence, you might see a lot of swings throughout the day, but then it still holds your supports and resistances. You might see a stock, shoot all the way down, and you looking at the stock intraday, you might become afraid, thinking that you're going to breach through your resistance. But then right at the end of the day, the buyers come in, they buy it all the way up, and then the next day it gaps up, and you're like, I got out. I shouldn't have gotten out. And it was because you were trading based off of the wrong based off of the wrong window, off of the wrong period of time. So it's why it's important to utilize both and not just one. Fundamentally speaking, yes, you want to make sure that a company, whether it's JetBlue or you're looking at AT&T, you want to make sure that these companies are making solid decisions. But if you're actually looking from a standpoint of, is this stock oversold? Is it overbought? You'd have to use technical analysis to figure that out. If you're just putting in orders just for the sake, today's Wednesday or whatever, you put in for a buy order, whether you put in your buy order for weekly or you put in your buy order for monthly, etc. Just because today's Thursday and you inject a little bit of liquidity into your account, it automatically does a buy, and it kind of fills in on what's weak and kind of fills out what is looking to be too strong or overvalued within your portfolio. You might miss out on technical analysis signs that are letting you know not to buy or not to sell, or to buy and to sell. Like for example, if a stock is breaking out and in your portfolio, you're looking at the stock and it's showing you, your 14%, but your allocation is only, let's say, 10% because maybe the stock ran up. And so then you enter your portfolio transaction for the week or for the month, etc. And then it looks at the portfolio and says, you've got too much. You're overweight. So we're not going to add to it, but you might be experiencing a breakout. You might be experiencing a breakout in a company. And so the only way that you're going to understand that and utilize your capital to the best of your ability is by taking a technical analysis look at the chart. What is the chart showing me? Is the chart showing, for example, is the chart showing a breakout, right? This is a perfect example right here, where if you were long Apple and you only wanted 10% of Apple, if Apple starts to break out and it goes over your allotment, and you add a little bit of liquidity, the system says don't add. But the chart says we might be experiencing a breakout and you should be adding to your portfolio, because as you can see right here, the stock held 431 and it was having a hard time breaking above 455. But as you can see, it's still holding above this line right here, indicating that Apple could be breaking out to the upside. For example, just like in JetBlue, right? For people who were up here, there was a lot of people up here buying at 1550s and $15 and 1540s, and there were people chasing it all the way at 1566, not paying attention to the chart, that the chart had weakness at 16. And that's why it's important to understand both from either whether you're trading whatever period, whether you're a short-term trader, whether you're a swing trader, or whether you're a long-term investor. It's important to understand the fundamentals as well as the technical analysis when it comes to trading.